Good morning. Today is Monday, August 24th, and this is the Monday Brief. Here's how this works. Each week I tell you what I'm watching. Next week I come back and tell you what actually happened, whether I was reading the right things or not. In between, we cover what moved in the markets and the economy, and 3 companies you asked about. Nothing here is a recommendation to buy or sell anything, and clients of our firm may hold positions in companies we mention. Let's get into it. Last Monday I said I'd be watching 3 things. The Fed minutes. I wanted to know how divided the committee was. More divided than I expected. They held rates, the 5th meeting in a row, but 3 officials dissented, and all 3 wanted rates higher, not lower. First time since 2016 that 3 broke off in the same direction. A lot of people assume the only live question at the Fed is when they cut. Part of the conversation in that room is whether they're finished raising. Walmart. I said I cared less about their numbers than their words. When Walmart describes the American consumer, that's about the best read on Main Street you can get. They beat on earnings and raised their full-year outlook. They also missed on same-store sales for the first time in at least 5 years, the slowest growth since 2020. And the stock fell about 9%. Their CFO pointed at gas prices. Above $4 a gallon, he said, there's a psychological impact and people start making trade-offs. The national average is $4.10. I'd asked whether the consumer was getting tired, and last week the consumer answered. Not a collapse, but tired. And third, Deere, our neighborhood. Earnings up from a year ago, guidance raised, used equipment inventories getting healthier, and they said they believe 2026 is the bottom of this agricultural cycle. The other side of that same report, the big tractors and combines are still shrinking. Sales and profits both down. And their own industry outlook has large ag volumes falling 15 to 20% this year. The recovery they describe points at next year. 3 things watched, 3 answers, and the week itself was a bond week. Friday bounced, but every major index still finished lower because the 30-year Treasury yield touched its highest level since 2007. And when long-term borrowing costs move like that, they pull on everything else. 3 things I'm watching, and one of them landed over the weekend. Trade talks between the United States and Canada broke down Friday night. 50% U.S. tariffs on Canadian goods took effect at midnight, and Saturday, Canada announced dollar-for-dollar retaliation, effective September 8th. Canada is one of our largest trading partners. What I'm watching isn't the announcement. It's the 2 weeks between now and September 8th, and where the cost of those goods eventually shows up. One of the companies we're about to talk about already booked a tariff refund this quarter. That's the thread. Wednesday brings the PCE inflation report, the inflation measure the Fed prefers when it's actually making decisions. It lands 3 weeks before their September meeting, days after we learn 3 officials want to hike. So does this number give that group more to stand on or less? And Friday, Kevin Warsh gives his first Jackson Hole keynote as Fed chair. The announced theme is financial innovation, but a new chair's first speech there gets read well beyond its title. I won't guess at what he says, but I will be listening for the reasoning. Next Monday, I'll tell you what came of all 3. Now the request line. 3 companies you asked about. Home Depot and Lowe's go together because the pairing is where it gets interesting. Both sell building materials and tools to homeowners and contractors. Both reported last week. And both are standing in the same weather. The 30-year mortgage is still in the mid 6% range, so people move less, finance fewer big renovations, and shift money from the remodel toward repair and maintenance. Both describe that same shift. Home Depot sales grew. Their same-store number was the best since 2022. And they left their full-year outlook exactly where it was, though that growth leans on professional contractors more than do-it-yourselfers. Lowe's beat on earnings for the 5th straight quarter, but sales came in below expectations, and they cut their full-year outlook to the bottom of its range. So 2 questions. First, what produced the beat? Lowe's disclosed that 11 cents of theirs came from a one-time tariff refund. Real money, but not a thing that happens every quarter. Separating what repeats from what doesn't is one of the oldest habits in reading a financial statement, and a headline won't do that for you, which is why Saturday's trade story is worth keeping in view. Second, and harder, same business, same week, same weather. One held its outlook, one trimmed. How much of that gap is the business, and how much is just how differently two management teams talk? That one has no clean answer, and I'd be suspicious of anyone who told you it did. Third, Nvidia. They design the chips behind most artificial intelligence computing, and they report Wednesday after the close. Their last quarter was a record, revenue up 85% from 1 year ago. And after that, the stock fell anyway. A number can be a record and still land short of what was already a. But my question on Nvidia isn't really about Nvidia. A lot of people own an index fund and reasonably believe that means they're diversified. Market cap weighted indexes hold more of whatever has grown biggest. So when a handful of companies become an unusually large share of an index, it stops behaving the way it used to. You saw a version of that last week. Rising yields hit the NASDAQ about 50% harder than the S&P. That's not an argument for or against owning one, but it is worth knowing what's inside the thing you own and how much rides on a few names. That's the Monday Brief for August 24th. If there's a company you'd like covered, put the ticker in the comments, and I'll take 3 of them next week. And next Monday, I'll tell you what came of the inflation report, of Jackson Hole, and of that trade story, and whether I was watching the right things. I'm Kenny Van Houten with Bravo 4 Financial in Rensselaer, Indiana, bravo-4.com. See you next Monday. Securities and advisory services offered through LPL Financial, a registered investment advisor, member FINRA and SIPC. Have a great week.